Morning, everyone. On behalf of Asian Markets, we welcome you all to the 2Q FY19 earnings conference call of Cera Sanitaryware Limited. We have with us today Mr. Bharat Modi, Strategic Advisor, representing the company. I request Mr. Bharat Bhai to take us through an overview of the quarterly results, and then we'll begin the Q&A session. Over to you, sir. Thank you.
Thank you so much, Kamlesh Bhai. Good morning and warm greetings to all of you. On behalf of Cera Management, I welcome you all to the earnings conference call arranged by Asian Market Securities and SEC, and I would like to thank Kamlesh Bhai for these arrangements. Before I start, let me read out the disclaimer, which is as follows. The disclaimer. Certain statements in the release concerning our future growth prospects are forward-looking statements within the meaning and applicable security laws and the regulations. These statements involve a number of risks and uncertainties beyond the control of the company that could cause actual results to differ materially from those appearing in such forward-looking statements. The risk and uncertainties relating to these statements include, but are not limited to, risk and uncertainties regarding the fluctuations in earnings, our ability to manage growth, intense competitions, including those factors which may affect our cost advantage, wage increase, our ability to attract and retain highly skilled professionals, political instabilities, managerial limitations, and legal restrictions of acquiring business, and unauthorized use of our intellectual property and the general economic conditions affecting our industry. Cera Sanitaryware Limited may from time to time make additional written and or oral forward-looking statements, including our reports to the shareholders. The company does not undertake to update any forward-looking statement that may be made from time to time by or on behalf of the company as a sequel to or in continuation of these statements. The company also expects the media to have access to all parts of this release and the management's commentaries and the opinion thereon, based on which the media may wish to comment and or report on the same. Such comments and or reporting may be made only after taking due clearance and approval from the company's authorized personnel. The company does not take any responsibility for any interpretations, views, commentaries, reports which may be published or expressed by any media agency without prior authorizations of the company's authorized personnel. Now, let me try to give you some glimpses of the performances that we have achieved during Q2 FY18-19. I would like to share that despite the continued subdued market trend in the construction and the building materials, we have done reasonably well for a top line in Q2 and half year ended on 30th September 2018. The revenue growth of 11.92% for Q2 and a growth of 15.35% for the half year on a YOY basis. The comparable bottom line for Q2 has shown some good improvements, including in the EBITDA as well as in the PAT margin. When compared to the immediate preceding quarter of Q4 of FY17-18, this is largely because of the product mix and the cost control measures undertaken by the management and the continuous process. This is despite the fact that the overall cost of goods sold and the gas cost has slightly gone up. The PAT margin for Q2 remained at 27.89 crores, being 8.50% as against 26.89 crores, being 9.22% on a YOY basis. With this narrative, and having said this, I would like to invite the questions of the participants, and we can begin the questions now.
Thank you very much, sir. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Sriram R. of Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity. Sir, a couple of questions. First, on the gross margin front, if I could see that, the purchase of finished goods has increased in this quarter sequentially. So where do we stand as far as the outsourcing is concerned? And, if I could have a sequential gross margins around 54%, which has come down to 52%. And also, if you could give us a picture on the rising input cost and what will be the that will be passed on as price increase to the customers. That is one. And the second question is, sir, on the product front, where is your focus currently? Is it on the 10,000 upwards of segment, or are we focusing on the standard or the economy segment? I just want to understand the strategy of the company in terms of product positioning.
If I summarize the question, let me be very clear about it. One is we are concerned about the cost of goods sold, which is going up, number one.
Yeah.
And number two, where our focus in terms of our product basket is. Is that right?
Correct. Perfect.
Right. Now, these two, the cost of goods, there is a cost push, yes, and therefore the question is our EBITDA margin, or even for that matter, the entire margin is under pressure. Now, the revenue model that we pursue is a combination basically of an in-house manufacturing that we have, as well as we have an outsourcing model. The question here is, the growth that we would like to really, manage, because, historically our growth has always been, if you take last 5 years CAGR, we have been exceedingly well, more than about 20-22%, and in a current scenario which has been quite subdued. Now, to maintain a growth is one issue that we need to really have a strong foothold on our market share, number one. And at the same time, when you talk about that kind of good kind of product mix that we would be really offering, which really allows us to sustain a market share, and how do we manage our cost? Now, on a three fronts, we've been fighting on that. And not only it, but the entire industry, the complete building material industry has been really trying or feeling concerned about it, because the demand scenario has been quite subdued for a new construction and new projects and all for various reasons. Some of them reasons you could say related to, the reforms, the political, the election in the offing, and therefore a lot of people have been trying to hold on what they will be doing in terms of their entrepreneurs putting up new projects. And therefore the cost of goods that we have, we need to absorb that. And we did not take any price rise until the quarter two. To really come back to that part, I might even say that now we have taken a price rise effective October. And that will definitely help us in improvising margin further. Till that, we had to absorb a cost. So that was one, even the cost of goods that we have been saying. And when we say an outsourcing business model, I might even share further things in terms of our capacity utilization. Sanitaryware, we are almost using our capacities to about 98-99%, and those 1 or 2% is not used only because of unforeseen circumstances. We recently had an issue about some labor, the outstates labor, they were probably under a sort of a pressure by some of the political wings. And we had to keep our production low for a while. And there is a maintenance. But for that, we have been using our Sanitaryware capacity almost about 100%. As far as faucetware is concerned, we raised our capacity from 2,500 pieces per day to almost about 7,200 pieces per day for the last 2 years. And we have been using that very moderately to about 60-65% on an average. And sometimes, some of those demand years, we have raised that capacity to 70% also. So these are the two things, on which we have been trying to rationalize our product mix and trying to have a strong foothold in the market, that we don't lose out our market to competition. And we feel that we can always bounce back to our margin once, those all headwinds are taken off and we are on a stable market. So we feel that currently the cost push which we have absorbed, and now from October onward, the prices that we have taken across the product range, anything between 3 to 5%, will help us to really improve margin as well.
So, and secondly, on the product front, in terms of your positioning, because
we basically so far, until so many years, we have been perceived in terms of the Sanitaryware value for money product. We always compare ourselves with Maruti. Let me be very honest about it. Leave us, we are not Toyota nor Honda. Leave us at BMWs and Mercedes. And we have always, by default, conclusively come to think that, okay, Maruti has a much larger horizontal base, and similarly, the product where we have positioned, we have a much larger horizontal base where the growth is slightly more than, and therefore we have a very strong foothold. But at the same time, we also have realized that, yes, we need to come out with the premium models, and therefore, a class of people who probably we were, the architect-driven or some influencers-driven business, but they always wanted a better product. And therefore, we have listed out a premium product within Cera, as well as we have come out with another brand called Senator. And we have got an excellent response for that. So way forward, we will have a very strong foothold, continuing to strong foothold on where we are in terms of product positioning and value for money. as well as now we are also trying to expand our range, where we can capture a slice or a larger slice of the premium market as well. So focus is not without losing our eye on what the value for money, but at the same time, using all our further capacities and our strengths, in premiumization.
So that would mean the premium end products would be outsourced because we are already at...
Not necessarily. It would be a combination of this. We will be continuing outsource on a premium product, which we have otherwise also were doing, even before Senator. We had a premium range coming from China, and, we were using our capacities in a very optimal way, where, we have a complete cost structure, how we use and book our capacities. We have almost about more than 250 SKUs, and we have a complete variable cost at the tip of our fingers on a computer. We have an SAP in the place, which helps us. And therefore, what happens here, as we get, our production capacity booked, but the moment we have a larger contributions coming from each of them, we try to fill up. The moment our contributions reduces, we will outsource them. But then using the capacity at optimal is the key concern for the management. And outsourcing is one where, we outsource our premium item from China, number one, and we also outsource, which is domestically, we outsource very low range of a category. But now, when you talk about how we have really been using capacities over last about 2 years, gradually, we also have been using increase the capacity to premiumize. We have developed a lot of in-house product which otherwise we used to outsource from China. So the capability that we have developed, with a 3D printing machine, we have been able to give a lot of options in terms of fast options in terms of throwing products in the market, newer products. Now, these all really helps us with the technological improvements. So in terms of the capability improvements, there has been a lot done in the factory. And therefore, the capacity utilizations have been more optimized, which includes more of a premium. And as a way forward also, we feel that, as and when we'll be increasing capacities, we would be using the same capacity more from the premium items.
Fine, sir. Thank you.
Thank you. Sir, just a feedback. May we request you to just, hold the handset a little closer to you as some parts.
You are saying to me?
Yes, sir.
Oh, sure.
Yes, this is better. This is a little better, sir.
Okay.
We'll take our next question from the line of Snehal Shah of ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, a couple of questions. One on the growth side. So can you give us a breakup of growth in all the three segments for the quarter?
Yes, sure, Nehal bhai. We have before that I'll give you a revenue breakup. I think that would make more sense about it. And then, we can always discuss the growth so that, follow-up questions can also have an answer right away.
Yeah.
We have a revenue almost about 53% coming from Sanitaryware. And out of that, the allied product is about 10.5 or 10.66 to be honest and precise about that. So we have a pure Sanitaryware which is about 42%. Then we have a business from a faucet coming to about 22.83, almost close to about 23%. And we have a tiles business which is about 21.44%. So that's what the revenue breakup is. And when you talk about a growth, we have a growth of about almost 7.11% is in a Sanitaryware. When I'm talking, these is value and volume put together. And we have a growth in faucetware of close to about 16%. And we also grew in tiles to the tune of about 18-19%. So every segment that we have been into it, we have been growing. Sanitaryware being a larger base, the growth comparatively to a newer product is in a single digit. But then we feel that once the headwinds, whatever that currently against the construction industry is there, the moment it dilutes, we would go back to more than 10% growth is absolutely within our reach.
Yeah. So Q1 in Sanitaryware segment, we had almost like 11% growth, so that has tapered off. Is this largely because of Kerala effect?
Kerala, yes, it did affect us. Generally we have a market share coming from Kerala, which is about 19-20% of our business. And this quarter, because of the Kerala floods, we almost were reduced to about 15-16%, which means, because of those natural calamity, a part of the business had to be compromised. But then Despite this, we comparatively did well in terms of recoveries, in terms of gating the business as well. So had the Kerala effect been on a normal way, would have done a business, I personally feel that we would have done even much better growth than the numbers that we have come out with for Q2.
So is it fair to assume that had Kerala not been the case, the floods not been the case, our overall growth could have been in the region of 15 to 16% and Sanitaryware growth could have been in the region of 10-11%?
Well, historically, if you say yes, I would subscribe to what you are saying, but then you always have market vagaries about it and there are always ifs and buts, but then we have continuously been doing this and our past performance do vouch for what you have come to a conclusion. So based historically what you have achieved, what you say, looks fairly within our reach.
Great. So that means Sanitaryware would have been almost closer to double digit or better than that had Kerala not been an issue. So that's...
Well, more or less you could say that, but it's not only the the Sanitaryware, but even other products as well, Why only we relate to a when you talk about, let's say, 7.5% growth, I can't say they jump to about 50% and would have done it purely on a Kerala effect to 10%. That would be a wrong conclusion if you try to do that. I may not totally agree to it. We need to deliberate further on this if you wish.
All right.
But I wouldn't like to go for any wrong conclusions about it as a management that I represent. But yes, Kerala effect, had it been normal, we would have certainly done better. That's all I can put it to.
Sure. And sir, can you give some heads up on the Senator, Jeet and SVR brand as to how they are progressing?
I'll start with the Jeet. Basically Jeet is a very low-end brand and we do not manufacture that at all, as I already said earlier also in my Concall. And it's generally, we are eyeing only to keep ourselves ready with outsourcing facilities at our command. Only to feed the market, which is an affordable housing, low-level affordable housing. And in affordable housing, also you have three categories. So when you talk about a Jeet, it's more purely a low-level affordable housing, but it's a huge volume that in terms of the macro-level figure that we come across, and therefore we don't want to be out of a business on that front. So we have kept ready. We have a brand. And, a lot of people would know that, yes, it's coming from House of Cera, and therefore the acceptability of that brand also would be comparatively easier. Though Cera does not per se attach its brand to a product called Jeet. But then we are pretty ready about in terms of outsourcing and also the distribution channel, which is slightly different than what it is because it's more of a contractor-driven business.
Sure.
Coming to, ISPI. ISPI is a top-end brand, when we want to compete the global players like the like of, let's say, Toto and Kohler and Duravitz. Because despite, the product quality, there are a lot of architects and interior designers who would like that Cera is a very dependable brand. But despite that, many times, they also have upgraded themselves to a much larger project and they said, look, I can't use Cera here. And therefore, we also do not lose out that kind of a business. So we have brought in this SVR, which is, designed in Italy and it's manufactured in Europe. So we can always try to compete. And that product also has a fabulously beautiful design. So, whenever anybody looks at it, I'm pretty sure that, any architect cannot ignore or close their eyes and no, and then they would be always trying to do that. To give you another example, in one of the Bangalore company, which is a very solid builder, and we have supplied ISPIA, and they only bought ISPIA, and they said they like the product. So it's receiving very well in that category as well. But that market is tough in terms of the competition because all the global players have been there and they also have been on a price war. So many times, but the growth per se that you would say would always be subdued in a scenario where we are at the moment, number one. Coming back to Sanitaryware, now this is where, we have been betting very, very much on this part, and we feel that that's the product which is going to take us to a next premiumization level. The products are excellent, very well received, and the way they have been designed, they've been positioned, we at management, we are pretty happy about it, the way we have positioned us. So in a time to come, Sanitaryware would be one which will ride high in terms of the total market share as well as the total revenue share within Cera.
And so what kind of size are you looking at in Sanitaryware, say 2-3 years down the line?
Well, this year, we probably would end up with about 50 crores business, which I would say is hardly about less than 10% of a business. But then, in a time to come, when you have a basket of complete, let's say I'm saying the mass for a popular product, then you have an upper, then an upper-lower segment, and then you have a segment which is a premium segment. The premium segment is on a rise, and therefore, with Senator as well as some of the other premium products that we have in Cera, with the brand Cera, that also has shown a rising trend. So these probably can easily go, in the next 3 years to about 20% of our revenue in Sanitaryware per se.
So 20% of Sanitaryware.
Currently, we are about 14-15%. I'm talking as a forward-looking statement that since our focus is more on a premium, this is where we would like that to be.
So you want
all efforts in terms of the media planning, into the product promotions, in terms of creating awareness, in terms of holding road shows with the architects, representing them with the CREDI. A lot of efforts have been done by marketing team across India. And therefore, this product we feel that gradually will pick up and will have a larger share, and our revenue also would go up on that.
So currently you're saying this 50 crore is less than, probably by FY19, if it touches 50 crore, it would be less than 10% of Sanitaryware revenues, and you're expecting it to move to 20% of revenue.
Well, in the next 3 to 5 years, yes.
Right. Right, sir. Thanks a lot, sir.
Pleasure, bye.
Thank you. Our next question is from the line of Achal Lahari of JM Financial. Please go ahead.
Yeah, good morning, sir. Thank you for the opportunity. Sir, can you help us with the power and fuel cost for the quarter as well as for the first half?
Look, in terms of the percentages, power and fuel, I would certainly tell you about this. Hold on for a moment. I'll just pull out those figures.
If you could help us with the absolute number, that would be even better, sir.
Absolute numbers, 1 second. Currently, I can only give you, the percentage-wise, and I can always come back to you with the absolute figure. There's no big deal about this. So let me see, give you what I have as of now on my hand.
Sure.
And, we have a gas and energy cost, which is about 1.89% of the sales. And when you compare it with the cost of production, is about 2.15%. And when you really talk about the power cost, we have about 1.35% and the cost of production 1.53%. And for the absolute figures, I'll come back to you on this. Don't worry about this.
Sorry, power you said 1.35%.
1.53.
1.53%.
Yeah.
Okay, sir. Got it. The second.
And the more or less comparable, even if you say comparable with the earlier quarters and FYs, marginal differences are there because of sometimes the generations of the power. They may probably be differing because of the wind velocity and therefore, but otherwise these are comparable figures.
Got it. And this you're saying percentage of the revenue, right? The total revenue.
The both I said, the cost of production as well as the percentage of the sales.
Got it. Great. So the second question I had was basically if you could help us with the previous quarter same revenue mix. Because the number what I have...
I already have given you last time. You want it again? I can give you once again.
No. You've given for second quarter 19, but based on what I have for second quarter 18, the revenue growth numbers are different, sir. So just thought of double.
17, 18 quarter 2, we had about 55% was the total Sanitaryware.
Right. Okay.
And then out of that, we had the allied product was about 12%, which means 43% was closed Sanitaryware. We had 22% was coming from faucets, and we had 20% coming from tiles.
Understood. That's very helpful, sir.
Yeah.
In terms of the demand environment or the industry side, do you think we have maintained just the market share, or we have actually gained market share specifically for sanitary and faucet?
Well, we have maintained a market share in some of the territories, We have also spreaded our wings, and therefore, for example, the northern side, the eastern side, we were having a lesser presence in eastern, Currently, we have been present more prominently there. So, if you see those areas where we were earlier not there or where probably we were slightly low on that part, again, we have gone up. South, all along we were doing almost about 42%, but the current quarter, if I might say, we did about 45%. So in terms of the business, it has been increased all around including the tiles, including faucets, across the product, because I already shared you the growth, individual product-wise growth percentage. It's everywhere we are growing.
Right. Fair point. No, I was just curious in terms of the market share, how's the competition in terms of price?
Well, competition is there, and competition is not the, basically on which any entrepreneur would really get worried about. It will have to weather out. Now, the question is, are we strong? Do we have a strong brand? Do we have a strong distribution network? Do we have strong fundamentals? Now, all these really come to help in a difficult time like this. And these exactly, when you compare with many others, I do not want to name them because I'm not here to comment on anybody else's performances. But we have done reasonably well only because of the inner strength that we have.
Got it. In terms of the growth as well as margin guidance, how do you look at the second half or the full year, FY19?
Well, we have almost, the half year, we have almost 15.35% of the growth that we have registered in the total revenue. And generally, historically, what had happened that, first 2 quarters and the second 2 quarters, there is a 45 and 55 is the ratio in terms of the revenue. Give and take, even if I very conservatively, I might say, it will be very safe to assume 47.5 and 52.5, which would mean that, the next 2 quarters generally give us at least 10% additional business than what we have registered for the 2 quarters now. So we hope that we might close, the year more than 15%, 16% growth. That is what it looks like as of now. Our endeavors and all our efforts are even to exceed 18% growth. But then I wouldn't commit that purely because a lot of headwinds in terms of the uncertainties, in terms of a lot of instability, largely because of NBFCs, which have now come into a scanner and a cloud, and therefore what would happen to the housing finance and the rate of the interest, a lot of other things which are beyond our control, which may probably affect the business. But it's in general to the industry, not specific to us. But despite these and all other odds, we feel very reasonably comfortable to, go anything beyond 16% growth. Looks like very feasible within our reach.
And in terms of the margins, given we have achieved...
Margin, this quarter, you've seen our EBITDA has improved, our PAT also has improved.
Right.
And therefore, with the price rise that we have now, just announced about 3 to 5%, I'm pretty sure the margin guideline also for the next couple of quarters would definitely be on an improved side. So overall margin also, we hope to improve.
Right. So you're saying basically compared to the first...
See, there are 2 ways you could look at it. Our business also would be higher in the next 2 quarters, or the margin because of the price also would be higher.
Got it.
And therefore, the next 2 quarters, we look very positively on this.
Got it. Sir, in the last quarter call, you had mentioned that you had taken a price increase from 1st of July, though it was announced in the month of April. So has that...
It was very marginal. It was only for some of the products in some of the territory. It was not across. Because, there were a lot of other headwinds that we thought that, okay, if we take across, probably, you may not be able to register a growth that you would like to have a growth. And we never wanted that to be an issue, that since you took a price rise, we didn't grow about that part, because we never wanted to lose out our market share. We always wanted our strong foothold in the market that we are. And therefore, we chose that to be very moderately passing on that price rise. But now, we feel very confident about this. And therefore, we have, raised and declared and announced the price rise across, excepting for the tiles.
So that means basically what you're saying is that market scenario has somewhat improved, which is giving us confidence that the price rise will be absorbed as well as there won't be any market share impact.
I wouldn't say the market scenario has improved. Market still continues to remain subdued, but our efforts, we have fine-tuned our efforts. We have intensified our efforts. Within, there are a lot of other headwinds, but then despite those headwinds, what can we do better is always a question that we ask ourselves at the management. Can we do better here, And then we have a critical analysis going on. And this gives us the confidence that, yes, if we change our strategy somewhere in this line, maybe we should be able to garner a larger share of a slice of a cake in terms of the business.
Got it. So just last clarification with respect to the other current liabilities, other long-term liabilities, it's increased from 16 crores to 37 crores in the first half. If you could help us understand what is it about?
Give me a moment.
Other long-term liabilities, sorry.
Yeah, you see, there are a lot of provisions that we have made for our statutory provisions like, GST and all. If you compare on a year-to-year basis what was happening, last time when GST came in, the business was subdued for 1 quarter. And this time the business in terms of that also has increased. So that is where the things, and therefore, more provisions have to be made. One, also for dealers incentivization also there are larger provisions because the business has come more. The general expenses which has gone up. So, but despite either margin, if you see, we have improved on the margin.
Understood. And just, sir, if you could help us with the capacity utilization you have given for sanitaryware and faucet, but what about tiles and...
Tiles, we have almost, we do not have our own capacities, but we outsource, and when I talk about a JV where we have 51% stake, that also as such is an outsourcing business model. But since we have a stake and it's a subsidiary, I must share that, we have, in Anjali Tiles, we are using capacity to about 78 to 80%.
78 to 80%. And if you could help us with the revenue, EBITDA, and PAT of Anjali for first half?
Well, we do not share those things, but I can always share that part that we are in a double digit in terms of the EBITDA margin.
Okay. Understood. Thank you, sir. I'll come back in the queue. Thank you.
Sure.
Thank you. Our next question is from the line of Anshuman Athre of Premji Invest. Please go ahead.
Yeah, thank you for the opportunity. So just wanted to get your views on the real estate market. How are you seeing the current impact of the NBFCs? Are you seeing any slowdown, or the builders to which Cera caters to are doing well?
Anshuman, we all know what is happening, at a macro level. You also know, I also know about this, but we can reaffirm what we have been seeing into it. The business in terms of the project, the new projects have been on a very low ebb. The business in Sanitaryware also, we are more now going for a retail. If I give a ratio, which earlier we had almost about 50-50, now it's more 70% is going on a retail for faucet as well as for the Sanitaryware. Only 30% of the revenue that we have booked, for this product line has gone largely for a project. Yes, projects are on a low ebb. But there have been movements, it's not that everybody has come to a halt like with the situation. They've been slow on this. And the slow is only because, there still exists a lot of excess inventory which a lot of builders carry forward. So they are in no hurry to complete them as well until there are other inventory which is lying in the stock is getting sold off. So they have been slow on this. And therefore, the project business is slightly on a slower thing. On a tiles, generally all business is going to the project, and we do not have a data also available with us, neither with the dealer or the distributors. Even if I try to give some data, probably I will not be able to say, look, that's the correct data I have given you, so you could excuse me on that part. As far as NBFC is concerned, yes, there have been under a scanner for last about a month and a half, and therefore what would happen at a level, is the future has to unfold. But then I'm pretty sure the government also is very much concerned about their priorities on housing and also funding housing. And therefore, they definitely would come out with more and more positive things where, if not NBFCs, but then at least, the housing finance banks and the companies would be able to offer those kind of things which generally would be available as a credit. The cost and the interest is always driven by what RBI is like in the inflation is going to control about it. So, is anybody's guess about it?
Okay, sir. So secondly, on a larger scale, with all these projects being proposed by the government on the Swachh Bharat, do you think the second time when these people upgrade, you will see more and more demand from for the organized sector in next couple of years?
Well, Swachh Bharat is something, when you talk about providing sanitation where there is no sanitation at all. At a macro level, the statistics say that only 34% of Indian citizens have access to a proper citizens, which means that the rest of the 65-66% people still are openly defecting, in the open field. Now, we are not into a product category or a product range which would directly go into really making Swachh Bharat and providing complete sanitation, which those 66% are currently deprived of. So that business directly does not help us, but overall, whenever, the unorganized sector also would try to feed them, the market would always get upward. It will always have a northward thing, and therefore, the organized players would stand to benefit in a time to come.
Yes, sir.
So this is where, we see an opportunity that, today, I might ask you a very, very genuine question about it. If somebody has a natural call in a city like Bombay, where would anybody go? There are no sanitation possible in a public roads. People have to find some five-star hotel and really, get released about it. Now, when you compare everything with all those developed countries, we are nowhere. And therefore, in a time to come, I do not know whether it would happen in 1, 2 years, 5 years, or 10 years. This company has a tremendous potential for a product line that we are. And there are no option to a Sanitaryware or the kind of a thing that we are into it. And therefore, we see, taking a long run, this is an excellent product with a unstoppable growth that we would be talking about.
Okay, sir. And thank you and wish you all the best.
Pleasure.
Thank you. Our next question is from the line of Costa Bobna of Rare Enterprises. Please go ahead.
Yeah, hello. Hi. Could you please give me a sense on the current competitive dynamics governing the sanitaryware and tiles market respectively, please? And could you also tell us, how Cera is positioned in terms of pricing vis-a-vis the competitors in both these market sectors, sanitaryware and tiles?
I'll take first of all the Sanitaryware, that is where. But in general, our prices are absolutely comparable with the competition. So we are almost in some of the territories, we are slightly higher in some of the territories. We are slightly higher about it. But when you compare Hindware and Sanitaryware and Cera, we all are at the same thing because we more or less have positioned our product line in the same category of a business demarcations. Well, we are nowhere comparable to what probably a Toto or when you talk about a Deravets or when you talk about a Roka. They are by far, probably the premium or the most luxury brands, and therefore we are not into that category about it. That's a positioning about it. We always said, I gave an example of we are Marutis. And therefore, we only would like to really expand our thing. Now, Maruti, since it has missed out, very recently, a brand called an Nexa for a premiumization within Maruti. And similarly, we also have come out with a premiumization with the Senator within that category. So we are also on a footpath or a pace growth which will take us with a brand upgradation. Cera per se would definitely stay there. But Senator would take us to a next level. That's what the strategies are in marketing.
What is this premium brand called?
Senator.
Sorry?
Even Cera also has certain premium range of a product within Cera brand. So far, we had only one single brand which was across, whether you're talking the mass or the popular level, you're talking upper level or upper mid level, or a premium, that was one single brand. Later we felt it that, when you want to really distinguish this, can we really take only one single brand and cater all the three levels? Then answer was probably coming that we need a second brand, which has to be higher than Cera. And therefore we spinned out Senator, in last March. Okay. And that the response has been excellent on that part, but, we still back it up as Senator by Cera. Because the mileage and all the credentials and the goodwill that Cera has for the last 35 years, that backs that up.
Okay. Great. Thank you.
Thank you. Our next question is from the line of Abhishek Ghosh of DSP Mutual Fund. Please go ahead.
Thanks for the opportunity, sir. So just wanted to understand the individual revenue growth that you have given. So in Sanitaryware, the 7% growth would largely be led by volume?
You see, it's a combination of volume as well as value put together. Let me be very honest about it. When we try to premiumize, what would happen, we will have a larger pieces more. bigger pressures, which would mean that the volume would drop. What exactly, we should be really looking at it, what is the kind of a production value did we turn out? If the production value which we turn out is how many percentage higher than what we had turned out in the last few quarters. So when you really compare production value, this is exactly what I was trying to say. We grew with a 7.11% is value and volume put together in terms of production values. And that is the better parameter, to really make an assessment rather than purely going on a volume. Because, there are different volumes that we carry.
Okay, but that would be more relevant for sanitaryware. How about faucets?
Even faucet also, there have been premium products. There have been, mid-range, there have been, starting or an, entry-level range. Sure. You see the faucet, you probably have come across a faucet where now, you have to turn out several times and you can open up a tap. Right? Now, you have what you call a quarter ton and a half a ton, you just have to lift your lever and then put it down and you have a mixture.
Sure.
So volume, if you see the volume-wise, both are same. They will not be probably one, but then the technology used, the maneuverability of the product, the design of a product, which makes it premium.
Okay, sure. That's helpful. So my second question is, while we have seen gas cost increasing on back of higher crude prices and rupee, we have also seen some amount of, they have come off fair bit, both the crude prices and this thing. So just wanted to understand one thing. We will typically see an increase and decrease in gas cost only when Gujarat Gas, or who's our main supplier in terms of the gas part of it?
We have gas arrangement from two. One is an administered price where we have a pipeline coming from a GAIL. There are some isolated wells where the gas just evaporates, there are no takers. We are one of them where the pipeline has been directly reaching to our factory. Okay. But it does not give us the 100% of our requirements. It only gives us close to about 46-48% of our requirements. The balance, we have to take it to the market. And Sabarmati gas, which is in Gujarat, that is the one. But then it's in international pricing. So currently, our scenario is that 45% close to is about what we get from administered price, and then the balance about 55% that we get it from the market rate. But the gas is used purely for a sanitaryware. We do not have any gas to be used in manufacturing faucets. And when you talk about a tiles, we do not manufacture it, sir, at all.
Yeah. So where I was coming from is that, with the correction in crude and rupee, if gas costs come down, that can only bode well for our margins maybe in the fourth quarter or maybe FY20 is what I was trying to understand.
Well, what you say is very right, but then, you need to see the weightage and an impact of a gas cost. As I said, the gas cost is hardly, I was only talking about is 1.89% as a cost of the sales. Now, even if, there is a 10% increase in that kind of a cost, it would marginally increase my cost to a 0.20%, And the question that you need to address and answer, can we pass on this kind of a price escalation on our dealer, on our end users or not? Then the answer is very simple. Yes, we can always pass it on.
Sure.
If you compare with the tiles industry, then the gas cost in Sanitaryware is much, much far more lower. It does not have any comparable figures.
Got it.
We do have that as one of the major cost components, but not as much as that it is for the tiles.
Fair. Just one last question from my side. Have we taken price hike in tiles also effective 1st October?
No, we have not. We have not taken any price rise there.
Okay. Thank you so much for answering my question and all the best.
Thank you. Our next question is from the line of Rinkle Shah from ASK Investments. Please go ahead.
Good afternoon, sir.
Good afternoon.
Congratulations on a good set of numbers.
Thank you.
Sir, just wanted to know the capex for FY19 and FY20.
Look, we have a rolling plan. I've always been saying, we have a rolling plan of a capex for the next years is about 200 crores, and we generally would try to fund it from internal accruals. You can't arithmetically divide it as one-third. This time, we have a capex that plan is almost close to about, 90 crores, out of which we already have incurred so far, so something close to about 26.5 crores.
All right. Okay. So thank you so much and good luck.
Pleasure.
Yeah. Thank you. Our next question is from the line of Sonia Lalwani from Purnartha Investments. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, I had First I'll ask the business questions. So, can you tell me the breakup of replacement market versus first-time buyers for Cera products?
Look, I would survive only a Cera product. Let's really analyze what is the replacement market. Replacement market is a tremendous market. The question is, there are no authenticated data available for what is the replacement market. Sometimes back we had conducted our own internal studies about what could be the replacement market across, and we came to some figure which is about 18% of the business which goes for a replacement on Sanitaryware. Faucet, it is slightly more also. I would probably much more than that. When I say these 18%, but sometimes you need to understand what this 18% is made of. And normal that you renovate a house while staying in the house, and you want to replace a Sanitaryware or a bathroom. Second is, you bought a new apartment, for example, and you do not like, or your architect, interior designer do not like the bathroom the way the builder has given and designed for you. So before occupying, while doing all other interiors, you break open and you redo it. Now, I do not know whether you would like to classify that as a renovation or a new construction. Is something that somebody has to answer this. But that also is forming part about 18%. But there is a huge market potential. We see that, yes. But for the hassles, if you want to, while staying in the house, if you want to renovate a bathroom, it calls for a plumber, you need an electrician, you need a masoner, and you need somebody who can arrange the supply chain, you need an interior. So a lot of people, they defer their decisions to renovate purely because of the hassles, not that they can't afford, not that they don't want to do it. But if we can find a solution to this, I believe the market can go manifold in terms of the overall business potential.
Mm-hmm. Okay. So replacement market is quite very small. It's just 18% of the total business. So,
well, currently that is what it looks like. But then in terms of the size of unexplored market, is a huge market.
So, sir, how do you see Kerala market being, when do you see the replacement there in the Kerala? So after
we are studying that what happens to Kerala in terms of replacement market. We are very bullish on this, and we feel that, yes, a lot of things which has, the flood has damaged, the market should open up. There are some signs of that, we are seeing on the ground level also. But then only after the next quarter and a couple of more quarter ends, we can tell you and answer these questions more precisely.
Okay. So next question being on, like you see HFCs, they are in the liquidity crisis, some of the HFCs. So they are facing some type of issues for disbursing loans as well. So we are seeing some slowdown in the housing.
Can you come again? I did not realize your question. Who are into
HFCs? HFCs, housing finance companies.
Housing finance companies, all right, okay. You're talking NBFCs and housing finance companies. All right.
Yes. So if you see, these are in liquidity crisis. So what do you see? How do you see this demand of the housing finance?
Well, you need to understand, there have been some good housing finance companies like, PNB Housing or Canpina Home, or there have been some other good housing companies like SDFC. And, they will not have those kind of a crisis with they have been funding altogether. Neither they will have a problem in raising money also. The question comes about those NBFCs which were also funding housing, and they were not able to raise money. And some of the housing companies like, Diwan Housing or maybe, ILFS kind of repercussions would be in the market, yes. The market would definitely have some ripples on account of this. We still have to really, experience this both way the market when it comes to funding housing. In the next quarter or the next couple of quarters, it will become more visible about it. But yes, it's a cause of a concern, and therefore, if you could add that one of the headwinds for the entire construction and housing industry. But I personally feel that the government is also very much aware about it, and they have a plan. The current Modi government, that housing for all by 2022, and if the government gets re-elected, I'm pretty sure that they will go in a full swing in terms of supporting housing, and we don't see that this kind of barrier would ever come in our growth.
Okay. So, sir, because these HFCs are now focusing on affordable housing, where they are lending to EWS, economically weaker section, and low income people. Do you think that privatization for Cera will play a major role in this type of scenario as well? And how do you see the distribution network where these housing finance companies are disbursing more of loans?
You see, affordable housing has three categories. One is up to about 12 lakhs, second is 12 lakhs to 35 lakhs, and third is above, it goes as high as about 1 crore. Now, when you talk about, if the entry-level affordable housing, yes, we are not really catering to that kind of a thing. When you talk about, let's say, 12 lakhs to 35 lakhs, some of the low-range products, some which we outsource, and the Jeet brand that we are trying to, bring it out would definitely fit into it. And when you talk about anything about, 35 to 1 crore of rupees in apartment, they have also now said that it's going to be about 2,000 square feet of an area. Yes, there are quite a few products of said I will get and find place there. Distribution channel, when you talk about, for first 12 lakhs, which is a weaker sections, we are definitely not there. It's all contractor driven and they're all price based decisions, and we will never fit into that kind of a thing. When you talk about 12 to 35, still it is a price driven, but then maybe, one or the other way with the Jeet brand, we may fit into that part. And about 35 to 1 crore, probably some of the quite reasonable good line of a product will definitely fit into it, and we are one of those very dependable and value for money products. So we will definitely find favors.
Okay. And sir, do you see your inventory days that have gone down or gone up?
No, if you really see all our working capital, which was, on a Q2, on a year-to-year basis, if you compare, we have brought it down to 105 days, as again 125 days. So we have been very vigilantly observing this, in terms of our working capital management. The data have been reduced to 60 days, which used to be more earlier than 70 days. And the inventory also was more. Now we have brought it down to about 45 days. So all put together in the inventory and the data, we are 105 days, as again 125 days earlier.
Okay.
Had we been little liberal about our credit norms, and expanded and all the working capital, our growth that you see today for this quarter of 11.92%, we certainly would have gone to 14 to 15%, but we were very tight on that. We did not allow those unless, you paid us money, which is more than 60 days, we do not give you material. Because in an anxiety to change the growth, you end up into sometimes, your recovery becomes a problem. So we never want to take those chances.
So, if I just want to, repeat what the number of inventory days you said, it was, you said 125 days.
Let me give you exactly, when you're talking about, I have an inventory days which is 45 days.
Okay.
For Q1 and 44 days for Q2, and the entire half is 44 days as an average. And my datas are also less than 60 days. So put together, I'm 104 days.
Okay.
On a comparable figure, for FY17-18, it was 123 or 122 days. But inventory days were 50 days. We have brought it down to 44 days. The data, which was 71.63 days, we have brought it down to 59 days. So that's a working capital efficiency.
Yeah, that's a major improvement.
Exactly.
Ms. Lalwani, may we request you to return to the queue, please? As there are several participants waiting.
Sure.
We'll take a next question from the line of Achal Lohare of JM Financials. Please go ahead.
Yeah, sir, thank you for the follow-up opportunity. If you could help us with the mix in terms of the mass, upper, lower, and premium?
No, more or less it has remained same. We are in a popular market with about 40-41%, which is, we are the first shaking point when anybody graduates, from an unorganized sector to an organized sector, they meet at the first shaking point. I can give a scenario, when anybody who graduates from a two-wheeler to a four-wheeler, they meet Maruti at the first. They would always like to look at what Maruti offers. Similarly, what they would like to look, what Cera is able to offer, they want to go for a brand. Above that, there is an upper market, which again we have divided as upper and upper lower.
Right.
Now, upper is about 25% and upper lower is about 20%. And above that, it is 15%, which is a premium market.
That's helpful, sir. Second question I had with respect to your the plastic product company, Packard. What is the status, how it is performing? And
well, it is still not, we have taken land now. It will only start production only from the next year on a commercial basis.
Okay. And in terms of the outsourcing mix, if you could help us with that as well, sir.
The outsourcing mix in terms of what? Currently, the plastic product is completely outsourced. We do not manufacture. It forms part of the allied product.
Segment, sir.
Sorry?
Faucet and tiles is 100% outsourced. But in case of faucet and
faucet, we have almost about 50-50.
Okay.
And, in sanitaryware also, we have 20% of the volume, which catches us about 40% of the value is outsourced. When I say that only because of the premium products that import from China. But otherwise, almost about 80% of the volume is manufactured in-house on sanitaryware.
Okay. So, the impact of the currency could be felt specifically for sanitaryware. So, is that...
Not exactly. I might, rule out that possibility also because, when you really try to say dollar has become expensive in terms of rupees, it also has become expensive in terms of the yuan. And therefore, when you negotiate a price, you always negotiate a price which was earlier price and they get a convertible currency in yuan considering dollar as a parameter. There could be a slight variations in terms of how rupee is depreciated and how the yuan is depreciated. But there's not that major which affects us.
Understood. And in terms of the tiles business, sir, last time we had said that we are changing the product mix. So how is that going about and how do you see the margin?
The Anjani tiles we have changed almost about 40% now, 40-41% is GVT now and 60% is soluble salt where it was earlier about 20% only, 50-20. And the same way, our total combination also is on a turnaround in terms of getting more and more GVT as well as PVT, which will give us a better margin for that segment.
Right. So the entire tiles revenue is sourced from Anjani, or I presume there is more outsourcing apart from Anjani?
No. Anjani is only trying to cater the southern-based market and maybe some of the eastern market where because of the proximity it is nearer. But we have another major almost, more than at least 10-20% more than what we source from Anjani is coming from Morbi. So entire north, west and central that we cater is purely with the help of Morbi. And now we have signed one more GV at Morbi also. It is also for GVT and PVT. We are also scouting to enter into one more GV on a tiles for a wall tiles. We have identified people, but we have not signed up or chosen any one of them. So the process is on now.
Understood. That's helpful, sir. I think that's about it, sir. Thank you so much.
Thank you, Achal.
Thank you. Our next question is from the line of Aksh Vora of Praj FinCorp. Please go ahead.
Yes, sir. I just wanted a clarification. You mentioned that we can take 20% of contribution from Senator brand or from premium category, you mentioned.
Senator is a premium category. Senator is a part of the premium category. And when I'm talking about, and Senator will be leading in that, What gradually we'll be trying to do it, whatever the premium product that now that we have been manufacturing with the brand Cera, if we brand it as Senator, we are trying to exercise that also that, if we bring it into a nest of a Senator, this reliability, the margins, would it improve and would it appeal to the customer and the dealers and the intermediaries there or not? So that exercise is ongoing. But eventually, we would like that Senator brand should contribute 20% of our business.
Okay, that's fantastic. Another, sir, just wanted, we've fairly done well in all the categories. If we can get industry growth in sanitaryware, faucet and tiles?
Well, there are no authenticated figures available, but then, when you lay your hands on some of those associations of the sanitaryware, the Morbi Association, they try to publish, and what government data in terms of statistics are coming out recently. Currently, leave aside, I'm not talking about Swachh Bharat because, we are not into that category, but I would only try to relate where we are. The growth is not more than about 3-4% in terms of value and volume put together on sanitaryware. Even faucet also is not going more than 5-7% in terms of at a macro level within India, I'm saying. And tiles market also has become fairly stagnant about that. So it's a question about how you position and you have a larger slice of a cake in your kitty.
True. So in that case, sir, are we gaining market share from the unorganized sector or from the organized sector itself, or how are we seeing that?
You see, both ways. If you study the last 5 years, we have been gaining a lot of share from unorganized and organized. We are also taking away the share from our competitors. Sanitaryware, for example, has been on a downsliding. Off late, they have come out very strongly with the price war because they realize, Sanitaryware is like, Coca-Cola thumbs up story. Coca-Cola per se would never like to promote thumbs up unless for a compelling reasons because Coca-Cola is an international brand and therefore they would like to promote Coca-Cola in this country more rather than they would promote thumbs up. Though, if you ask any Indian, he would prefer thumbs up compared to Coca-Cola if available. But they would not like this. So Roca is here to promote Roca as a product, not Sanitaryware. But maybe they realize that mistake off late and they say that now Sanitaryware is such a strong brand, why would they like to waste it? So they are coming out with a price war on that. And sometimes we also witness that. As far as Hindware is concerned, the competition is an excellent brand. It is very well accepted, widely spread. We respect that brand as well. But their growth when you see and our growth when you see, probably we are far more comparable on that part. You can have your own analysis on that part. But if you had asked me questions, what is our market share 5 years back, I would have said, we only have a market share of about 18%. And currently, if you ask me, we have more than 23% in an organized market share. And therefore, in an increased market in 5 years, if you could increase our share of percentage also, that itself is a testimony where we stand. Secondly, we have expanded our capacity, manufacturing capacity more often than what our competitors have done in the past 5 years. And therefore, it says that, look, yes, we are gaining market share.
Right. So I was coming more from a point of view where post-GST, a lot of unorganized sector, might have come down. Like, are we gaining from, the benefits of GST or...
Well, you talk about a reform, it's a very welcome reform, and any reform, whenever it comes, you need to give at least about 3 to 5 years by the time you realize its economic value getting transformed. So if the GST is, has started implementing only about a few months before, and now we try to really make a gauge of this, that, okay, look, did we really benefit? Yes, there is a lot of positivity about it. But then if you take it tomorrow, the GST has come and tomorrow all organized sector will grab every business unorganized sector was doing and they will close down, would never happen.
Yeah, I understand. Just lastly, sir, any updates on a couple of JVs we were planning to get into in tile segment?
I said, only a few minutes back, we already went into one JV for floor tiles, which is GVT and PBT. Now we have been trying to infuse money and we have signed up an LLP agreement with them. We are scouting one more for wall tiles, and we have identified few people, but we have not as yet taken a decision. Maybe we might take few more months.
Okay. So
all that we want to say is signal, that we are a serious player in tiles. That's what the signal that we would like to give to the market.
Right. So going ahead, we'll be looking a route of a JV or a tie-up only, not acquisition or anything sort of?
Well, acquisition, what way would you mean? If we have a stake, let's say 26% or 51%, we are a part of that. The question here is, what really the parameters we would be taking into consideration is what is our investment in that and what is the reason that we are getting into it. So based on these, our investment decisions would follow.
That's really helpful. Thanks. All the best, sir, to you.
Thank you very much.
Thank you. Our next question is from the line of Ritesh Shah of Investec Capital. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, you have done a wonderful job on the working capital side. Sir, just wanted to understand if you could please explain it segment-wise, how have you dealt with faucets, tiles, and sanitaryware separately?
You mean working capital?
Yes, sir.
In the same way, there are no differences because these are the norms for the company. There are no norms separately for A or B divisions because eventually we present as a company to you. Yes, there could be something, in terms of the tiles where, the offtake is lower.
Correct.
And therefore, but then we do not give a credit of more than 60 days anyway, even if we suffer on a business. I already made a statement. Had we been liberal on a working capital front, our growth probably would have crossed more than 15% even in this quarter as well. But then you end up into a risk of recoveries. You end up into several other kind of things which we thought that it's not a wise decision for us. So we wanted to control our inventory. We also would like to control our debtors, and that's why the working capital norms are more or less across. It's sometimes depending upon some of the territories, some of the dealers, well, let's say, for example, Kerala. Now, these kind of things when happen, you need to stand by them. You can't really enforce, look, this is what is happening, because all along they've been with you. So these are all very special cases on which the management takes the decisions about whether to compromise on those norms or not. But these are very special cases and it goes to the top people.
Okay.
The ground people do not take those decisions. Yeah.
Sir, qualitatively, can you provide some more color? Basically, working capital has improved very sharply. So is it like tiles which are still facing some concerns on demand and wherein we are not that aggressive in taking the debtor days down as compared to faucets, wherein you are seeing some improvement on the ground level and wherein we are being able to...
Why would you say so? Because, the growth is highest among all the three products is in tiles.
Right.
And therefore, our growth, in terms of percentage is the highest in tiles, even if you compare with faucet and you compare with Sanitaryware. So, we have grown. But the question here is that we could have grown with 50% as against what we have grown was a possibility, but then we can't take a hit on a recovery not coming.
Okay.
We can't go for a price war on that kind of a thing.
Okay.
Because at the end of the day, you need to take a call that why are you in the business? You are here to make money.
Correct.
So as an entrepreneur, no management will take a decisions indefinitely for this.
Right. Sir, is it possible, if you can help us with the volume growth for tiles, when you say 19% revenue growth, how much was the volume growth for faucets and tiles separately? And secondly, where do we see the working capital stabilize? Because post-Kerala, I think things will only improve. So where should we see it by March?
I would answer your question, volume growth is not possible for a faucet at all because, faucet is something where, you have a complete, let's say, for example, in a bathroom, it goes for a mixture.
Right.
When you have a wet area, you have a dry area. Wet area, I mean a bathing area, the dry area, which is only wash basin part of it. Where you only need one, in a bathing area, you have a combination of this. And therefore, the volume growth is not possible to be given. Even if I try to go, I'll be wrong, you'll be wrong on that part.
Correct.
On a tiles front, is more of a GVT, and therefore the volume growth has dropped, but then the overall realization has gone up.
And sir, how do we see the working capital stabilize? We have done a good job.
We still like to further improve these 100 days, 105 days. We have stabilized, we have brought it down, and ideally, this is where the industry, we probably by far are the best in the industry, or at least one of the best in the industry. But endeavors, there's always a scope of improvement, and therefore the improvement would always be on an eagle's eye. People have been working on this. The entire finance department is sitting and with a magnifying glass on this.
Correct. And sir, you said price growth of 3 to 4%. We haven't taken anything on tiles, so this is broadly on faucets and Sanitaryware.
Faucet is about 3%, Sanitaryware is about 5%.
And sir, this was in October. Was it second half of October?
Well, it is effective 1st October, but what happens, any delivery that takes after 1st October, not exactly delivery, but the orders placed. So if you had placed an order, let's say, for example, in September,
right?
Now it doesn't apply. Even if you deliver in October, so it will be evened out in 3 months.
Correct.
So maybe next 2 quarters, we are hopeful that the price rise should help us in raising our margins.
Right. This helps, sir. Thank you so much. Good luck.
Pleasure.
Thank you. Our next question is from the line of Ronald Dalal of Ambit Capital. Please go ahead.
Hi, sir. So most of my questions got answered, but just wanted to get a sense on your capex guidance. You said around 90 crores. So so that was in what exactly was that deployed? So the JV was there, staff colony, some maintenance, and the display centers. But anything else I'm missing out?
No, not exactly. We would be raising capacity also in Sanitaryware, but then we probably we are fully using our capacity. Let's say about 3 million capacity. We almost use 99%, 100% capacity. So, we are on a drawing board now at this moment that, what happens after this. If the market opens up, we need to be ready because there is a gestation of at least about 12 to 18 months by the time you raise your capacity. So we would like to bring it. We hope that the market should open in at the most next 12 months time. Till that the moderate growth about 15, 18%, 16% growth is what we would be aiming at. And once it opens up, we feel that we can really cross 20% growth as well, and then we need a capacity expansion.
Okay. Sir, what about, you had earlier mentioned on the call that for Senator, you have the branding like, say, Senator by Cera. And ISVIA is not the same way, right? ISVIA, you keep it completely separate, like, say, as you mentioned, like a Coke and Thumbs Up, is it?
You see, ISVIA is a foreign brand. It's like, Toto, Roca, Duravit, which is a European brand.
Right.
Now, they also wanted to have a penetration through our distribution channel, and therefore we signed up an agreement with them that, okay, we'll be co-promoting brand. So ISVIA and Cera together will be promoting, but then in the forefront it is ISVIA. We don't own that brand, but Senator is what we own that brand. It's our brand.
Right. But so you wouldn't face, or wouldn't it be like better say since Senator is a higher end, so it wouldn't be better just to have it like a Senator, like how say Jaguar doesn't have Jaguar by Tata, maybe they just have Jaguar. Is that strategy also something you had thought about?
You see, many times that, creating a brand independently of all the goodwill that you have achieved for 35 years. Maybe, one of our competitors, Big Brother, they have 5 or 7 brands even in Sanitaryware. And if you really see, the individual contribution of that brand, many times, you would be very, very finding difficult to justify the amount spent in developing that brand and the revenue model that it will be able to bring in. And therefore, we have adopted a very safer course whereby we do not want to lose out on the entire goodwill and the credentials Cera for all 35 years has been able to build it. And despite Cera is somewhere slying to, it might fall short in terms of finding favors with the architect-driven business when they compare with global brands. So we have spinned out a Senator. But it's from House of Cera which assures them the dependability, the quality standards, the service, and the ethics. And therefore, Cera is projecting, in terms of what we have gathered in terms of our goodwill.
Right. And sir, so Senator is high-end and ISVIA is like luxury as well?
It's a luxury brand.
Okay, so they would not compete with each other?
Absolutely not.
Okay. Sir, and one other thing is that, so tiles, you're saying that you want to be a serious, or you're looking to remain a serious tiles player, or signal that you're a serious tiles player. So sir, how is the tiles market, how is the demand firming up, and what do you see or anticipate on the next few quarters? Because tiles has seen some changes and some slowdown, if I may. So what
if you really see the leader of the tiles, Cera, the result has been fabulous. You have seen it for the last 2 or 3 days. What happened to that?
Right.
So there is a business, there is a revival that everybody sees it, and why not Cera? We have a strong distribution. We have a strong design to offer, and we have a capability to really cater the market from end to end. So, you always follow somebody who has shown success. You never look to somebody who probably have been trailing behind.
Right.
So, Tiles says that even in Cera has, more than 15-16% EBITDA margin, which is a fabulous, we really respect that. And, the challenge that we have is that, okay, why can't we have that kind of financials, in terms of EBITDA as well as, ROE and ROC both? So you always follow the leader. You never follow somebody who has been trailing. So let's see that, yes. And you tell me what are the other options to a flooring. You have very few options for the flooring. And today the vitrified tiles are the most acceptable in terms of the cost, in terms of offering best designs, in terms of maintenance, in terms of ease of fixing. And therefore, this is remaining. And if you see the per capita consumption of a tiles compared to any other neighboring country and us, we are far more low.
Right.
So it's a question about the current scenario which is passing through a bad phase. We need to weather that out. It doesn't mean the product is bad and we are in a bad product.
Okay. And sir, what about, how would you say that, so basically a lot of times we do some dealer checks, say in companies in Morbi, and a lot of people feel that in tiles particularly over the last 6 months or so, what's happening is that many people are opting for non-branded tiles as well. How important would you say the brand would be while selling tiles, and also how much premium can this kind of a brand charge? Like just maybe generally brands, not specifically related to Cera, but even if you would like to comment on that, that's also welcome.
I'm glad you raised these questions because, that brings a lot of clarity, and I would like to really clear out this part, Let me start with that. Tiles basically is a commodity. I mean, once you open up a box, nobody wants to know which tiles have you fixed it. Tiles, even if, a chip has been chipped off in a corner, you would never bother about replacing the entire tile also. And therefore, once it's like a rice pack, what basmati have you really used once the box is opened? Nobody wants to know. They only want to know what is the color, what is the combination, what is the design part of it. But yes, of late what happened, for last 10 years study, if you really see it, Kajaria has come out with a very strong brand, and thereafter many other followers also. Nitco and Kajaria, they were leaders into the brand promotion on a tiles alone. Somani also has made a lot of good time in terms of creating a brand for themselves as well. A question here is that when you really talk about the Morbi guys, and when you really say, yes, they are by far probably in terms of creating economic value by creating a hub for a tiles manufacturing, they probably can match any other hub in the world, including China, for that particular segment. Question here is that, Morbi guys, where do they differ and where the organized players like we, Kajaria, or maybe Somanis and Nitco would differ is only in terms of that thought process. Morbi guys generally, they lack the vision, barring few. I wouldn't like to produce it because there are Chota Bada Leke, there are about more than 1,500 tiles manufacturing unit. There are about 3 or 4 who have been raising heads to a national level. And they probably are capable, a lot of it, like Vermora is there, like Simpolo is there. They are. But then there are so many other tiles manufacturing companies in Morbi who do not have a vision, nor do they have any concern about maintaining a quality. And therefore, what would happen that catering to a market on an all-India level, it would be very, very difficult for them. And therefore, a lot of people would go to Morbi, try to scout the requirements from them and try to load from there. They might get a cheaper one. But then India is a very vast geographically spread country. Everybody cannot have that kind of a thing. So there is a market for organized player where you trust a brand, you trust the quality, you trust the consistency, you trust the policies about uniformity. So brand players do have that kind of advantage on us.
Right.
Mr. Dalal, may we request you to return to the queue, please?
Okay. Yeah, sure. Thank you so much.
Thank you. Our next question is from the line of Rajesh Ravi of Centrum Broking. Please go ahead.
Yeah, hi, sir.
Hi. Good afternoon.
Most of my answers have been answered. A few basic, it may sound so. So, like in Sanitaryware, would you let me know about your regional market mix, please?
We have about 44-45% coming from the south, Then we have a north. When I talk north, I also include Rajasthan into that. Rajasthan, all northern, we have about 26% of the business coming. Then we have west and central all put together like Gujarat, Maharashtra and central province of this. It's about 23%. And east is about 6%.
Okay. And sir, when you talk about this sanitary growth, industry growth of around 5 to 7%, so like what was it 3-4 years back? Like when you also discussed that these are highly underpenetrated, India as a market. Yeah, India as a market is, per capita consumption is so low and still it is growing at such low, growth. So, how was the growth 5-6 years back?
No, you are talking about Sanitaryware, you are talking about tiles. Or in general you are talking about?
No, Sanitaryware I was more focused.
Sanitaryware, currently the growth rate as industry is about 3-4%, and we are growing much higher on that part. That's a volume value put together. We are almost, even if you take the past several years, we have always more than double the growth that we have done it. We have always exceeded the normal industry growth.
Right. But the industry...
Irrespective of the product, and now, when you talk about the tiles or when you talk about the faucetware, these are the two products we entered them in a little later stage. We entered faucet in about 2010-11. We entered tiles in 2013-14. And since we were a beginner, our base also has become low compared to the size of the market. Our growth percentage has been more. But we had a drop in the ocean. What kind of in terms of the overall revenue, if I really compare for a faucet, we are hardly about less than 300 crores to a market size which is about more than 12,000, 15,000 crores. I'm talking organized and unorganized both put together.
Okay.
And therefore, there is a tremendous scope for people who are at our level with a strong distribution network, number one. Number two, who have a very strong, consistent policies with the dealers and the end users, with the service backup that we have for faucets. So we feel that, if the headwinds are taken off and, you go on a stable business with a little tailwind which opens up, we are a capable lot of people where we can bounce back with about 20-25% growth on a compounded annualized basis for years.
Okay. So this tapering of growth is only a short-term phenomenon is what you're...
Well, currently, let me say, the entire construction industry is very cyclical. Every 5 years, there would be some years which will be stagnant.
Correct.
Our 5 years will be, unstoppably going up, and then the 2 years would come, which becomes stagnant again, it will go up. But what happened, there are a lot of reforms which came and affected the entire construction industry. Then there was a change of the guard at Delhi also. The government was changed. A lot of people became bullish at the fag end of the trade cycle. And they started a new project. So when the trade cycle was leading towards stagnancy in construction, they started a new project. So now the stagnancy is getting further extended by a couple of more years.
Okay. And so in two more questions. One on the sales promotion and advertisement expenses. I see together is around 10%.
No, it's hardly about 4%. I think where did you get a figure? I don't agree to that.
Yeah, both together I'm saying. Sales promotion expenses and second is publicity and advertisement expenses.
Promotion, when you talk about, includes our incentives as well. When you talk about publicity expenses, we are hardly about 4%, less than 4%, which is consistent.
Correct. So is this standard or is this a scope for, how would this number, this would remain?
Well, it would depend upon. We have been stabilizing around that as a part of our cost control measure, and we feel that we are pretty comfortable on this kind of a percentages, on a projected sales that we would, at the beginning of the year, we would make, and we'll make a budget on this. We'll divide it, regionalize it. We'll also try to divide how would we like to approach them in terms of promotions, including the print as well as the electronic media. So there have been, experts within the company who have been advised also by ad agencies. They've been working on this.
Okay.
And our vice chairperson, Ms. Dipsika, personally looks into it.
Okay. And last question on this CapEx, 90 to 100 odd crore, which you're guided for. This would be spent totally this financial year, sir?
No, it's about 90 crores. That's what we are planning on that part. And now, we wanted to raise the capacity also. We wanted to add a capacity on faucet in terms of creating a better capability. It's a question about not only raising a capacity, but really building a capabilities also, where you can really go for a premiumization of a product. Plus, we want to open up more display centers. We also would like to promote our brand.
Okay. So, if I understood correct, this 90 crore would be spent in this financial year, FY19.
But that's what we are planning. As of now, we only spent 26 now. As the quarter would unfold, we'll take a call as to how are we progressing on this.
Okay.
So, originally when we had, we began the year in April, this is what the target that we were talking about. Now, as the economy unfolds, as we go on, we probably would either take a call to continue with these or may probably slightly change our plan. That the next couple of quarters would really become more clear on that.
Okay. And lastly, if I may chip in, this 200 crore total capex that you are planning to do over next 2 to some time.
It's a 3-year rolling plan, I'm saying, and please understand what I mean by that. We generally generate, about internal accrual to the tune of about 70 crores every year.
Yes.
And we are a completely debt-free company. We do not borrow, and we are the people who would like to invest all money that we earn into the business.
Okay. So,
and therefore, this 200 crores benchmark figure has come from there.
Okay.
And still we have to really define where we would be spending, but then we have many avenues where we would be spending that.
Okay. So I just wanted to answer, what sort of revenue would 200 crore, potentially generate for you?
But you can always have an asset turn. We are an asset-light company. You have seen that part.
Mm-hmm.
Even if we build a JV, for example, that will be part of it, or we have an outsourcing business model. So sometimes we have to really, have more working capital there also. So these are all avenues which it can absorb in terms of our accrual being spent on.
Okay.
And eventually it goes into a business which itself has to improve the revenue as well as our all fundamentals.
Mm-hmm. Great, sir. That's all from my side. Thank you and all the very best.
Thank you very much.
Thank you. Our next question is from the line of Jaspreet Singh Arora of Systematic Shares and Stock. Please go ahead.
Hi, sir. Good afternoon. Thanks for the opportunity.
How are you? I'm good.
Thank you so much, sir. I'm good. So just to take that the previous participant's question ahead, in terms of the capacity increase, how much would that happen across the products? If you could just help highlight it, since we
are almost supposed to increase Sanitaryware by further 10% to 3.3, which we have been saying also, but we have just put it on a hold because of the market conditions as of now.
Sure.
But then we can roll out that part. That's number one. And I want a Sanitaryware at the same location. Then we do not have more land to really go. And therefore, if we have to further increase, we'll have to go for either a greenfield 4-year project, or we'll have to sign up a JV or some sort of a thing. There's a lot of options available to us. So we'll choose those options when we come close to those kind of decisions. That is number one. Faucet, we have recently increased the capacity about 2 years back to 7,200 pieces, and we are using almost about 60-65%, sometimes 70% as well. So once we start using that capacity close to 90%, which we feel in the next couple of years would happen, then, we'll start looking at further expanding that capacity from 7,200 pieces to 10,000. We have some balancing equipment and some building and added building would make it, the same location. We have enough space there. So we'll not have to really look forward for any other space for the faucets. Tiles, anyway, is either outsourced or it is a JV. So as I said, we have already signed 2 JVs now. We are also really thinking to sign one more JV on a wall tiles.
Okay, so that is something that you're planning in the second half?
Not only that, we also signed one more JV, as you said, for those plastic products.
Right, okay. Sure. And so bulk of the money would essentially go for expanding sanitary from 3 to 3.3 of this 200 for whatever the capex that you plan. Is that correct?
No, that wouldn't be correct because, this is only the manufacturing capacity that we are talking. There is the other side of the thing, which is marketing and the brand building.
Sure. I'm saying just from a capex perspective.
That also is a part of the capex,
Okay.
There's a part of the capex. Display centers, for example, when you really try to, open up, would promote brand, may not, directly do a business, but indirectly would support a lot of other dealer distributors in that territory.
Understood. Sure. And
so just the brand promotion, brand awareness, brand penetration, intensifying further, a lot of things would come into the fray.
Understood. And just related to that, this broad mix that we have of what you shared, Sanitaryware 55, faucets 22, and tiles 20, do you think this is something broadly that is likely to continue for the next couple of quarters? Unless obviously you expand tiles dramatically. But this is how it would look like?
Well, as of now, this year we may close with the same kind of a ratio, about 20%, 22% is on a tiles, and then we'll have about 22-23% will be on. Put together about 45%, I'm saying.
Sure.
Will be between the tiles and the faucets, and then the rest 55% will be for the Sanitaryware.
Got it. And just lastly, sir, you mentioned this before, but just to, reconfirm, any thoughts on considering any other product lines, because some of our peers have ventured into something like apply or related products. So is this our product portfolio will continue to be this, at least in the immediate foreseeable future, or
Just let me be very honest, we are very conservative about whenever it comes to a product expansion.
Right.
I'll very loudly say that, we only do business which we understand.
Correct.
We do not get into the business which we do not understand, even if somebody throws us to that. Even if they throw us, it's very lucrative, these and that, but we generally do not get into it unless we understand this. So, there's nothing on a drawing board that we would diversify into a product which are unrelated.
Correct. So there's nothing which is exciting us or which is something that you understand and you would like to win.
Why I would say, I would on the contrary try to say that, we feel that there's a tremendous scope even within the bathroom. A lot of people, they spend a huge amount of money. They enjoy spending money on a bathroom. And there still remains a lot of business can really come from this area. We have still not come to a stage where we mentally feel that we are saturated here. We still, for the next 5 years, there is a lot more to offer.
Sure. Got it, sir. Thank you so much and wish you all the best for the second half.
Thank you so much, Yashwant.
Thank you. Our next question is from the line of Omkar Kulkarni, an individual investor. Please go ahead.
Hello.
Yeah.
My question was regarding Cera Style Gallery. There is one Cera Style Gallery near my home, so can you explain the concept?
Look, there is one concept about Cera Studios. When we have almost in 10 major cities, we have a display. And when we say Cera Display Center, which is spread in anything between 10,000 to 20,000 square feet of an area in a very prominent business locality, we do not sell anything from that. It's only that, either architect or home builders or some of the interior designers and the builders, they themselves can come and see the product that we have, because it's very difficult for any dealer or a distributor to demonstrate all the product that we manufacture. So what happens, somebody comes here, he takes a code number, it goes back to the dealer of his own choice, and he would negotiate a price there. We can help them in identifying a dealer, nothing beyond that from that, but it's only a display. As in what you said, only a display center. Now there is another concept. There is a Cera Style Galleries. There are some progressive distributors, dealers, who have either would like to expand in the same business and they're able to allocate about 1,000, 1,500 square feet of area dedicated to us. And then they would only demonstrate there. Otherwise, the whole trade is a multi-product, multi-brand, and therefore, you walk into any other retail touch point, you will say every product, which is even by competition also. But when you talk about a Cera Style Gallery, that dedicated area only will have the Cera product displayed there. And this is what we are promoting more and more on that, because across the country, if you want to say, demonstrate your product, there are limitations where we could open up our own display centers and we cannot go into the interiors. And therefore, we are trying to promote this more and more.
Okay. Another question is, now tiles is around 25% of your overall business, approximately.
No, it's 21% as of now.
Yeah, okay, 21%. So almost 1/4 of the business. So what is the current margin in the tiles business?
Look, margin, you have to look at it from this way on, we don't manufacture this, so therefore there is no EBITDA at all. That comes to the fray. What is important to us is the return on equity or return on investments. Now, take a say, even if we have a single-digit margin, even if we turn over that for 4 times, we have a reasonably good margin on this.
Okay.
It's not an EBITDA that really should be considered when you have a complete outsourced business model for a tiles.
Okay. Yeah, I'm just trying to understand whether once the business reaches a certain point, like around 30 to 35% of the overall revenue, it won't impact your overall margin?
Look, when you have a business model which is a combination of an in-house manufacturing as well as from an outsourced model, which is what we are an asset-light company, which is one of the best parameters that we are valued for.
Correct.
And when you have this business model, you don't talk about an EBITDA margin. Eventually, what matters to the investors is what is the return on equity or the return on the capital employed.
Correct.
And if you really see, we have reasonably well placed compared to the competitions and the peers in this industry. At one point of time, we had a fabulous, ROE of more than about 25%. Well, the market currently is not allowing us to have that kind of a thing. and therefore we have gone down a bit on that part. But then question is that, okay, do we have a capability to bounce back? Do we have the strength? Do we have the product? Do we have the product basket? Do we have the distribution channel? And are we at the right place, Then the answer is yes to everything, which would help us to bounce back in a time where it is really leading,
So currently it would be around 20% ROE?
Well, currently, when you talk about as a standalone, we are 20%, but with the, consolidated, we have gone down a bit because, we have little borrowings in the Anjali ties also.
Correct. Okay, and can you please tell what is the cash on balance sheet currently?
Well, we are a cash-rich company, and we have a surplus. We even do not use our working capital sanctioned by the banks also, because, we have been able to manage our working capital far more better than many others in the trade, number one. Number two, we do not have to service any interest costs also on that, and whatever surplus, either we park it very safely till we get, our capex plan getting implemented. So, we sit on or hold on a cash.
Yeah, so what would be the number, sir, exact?
We have about 100 crore plus.
Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the floor back to Mr. Kamlesh Kotak for closing comments. Over to you, sir.
Bharat bhai, just one point, if you can highlight how many display centers and gallery now we have and how we plan to expand that over next 2 years.
About 150, and we would be planning to reach to a 500 in a time to come next 5 years.
That is gallery?
Yes.
And display
it's an ongoing process, what happens, as we have, these are ambitious plans, honestly. And it's not that easy one to implement, but then aggressively we want to do it. But as as a management, we always set very high standards. You can't have a standard which is low and then say, look, you achieved it, Even if you fail on a standard, but it has to be very high standard.
And display centers, how many we have, sir?
We have currently about 10.
10, which will go up to?
Well, we probably may go to another 1 or 2 more, but then the focus is more on the galleries.
Okay.
Because we have almost covered every capital of a state where the business comes from.
Right. Great, sir. So that was a very insightful discussion. Thank you, sir. On behalf of Asian Markets, we thank everyone for joining for this call. Thank you, Bharat bhai, for giving us a very detailed insight about the business and the performance. With that, we conclude the call. Any closing remarks, sir?
Thank you very much, and I thank everyone who has joined this call, and anybody who has follow-up questions can definitely approach me, and I would be too glad to answer and satisfy all the queries that they have. Thank you very much for joining. Thank you so much, Kamlesh bhai, to you for arranging this. Thank you.
Thanks.